Hello, my name's Tom. We say Frangione, but not Frangione. In Italy, I guess they say Frangione. So thank you guys for taking the time with me. As I said, I'm with Greylock Partners, which is a venture capital firm based in Silicon Valley. Some of you I've seen before, and hopefully see some more of you later. Before I get started, wanted to maybe ask your help on a couple things. One, I have this coveted just before lunch spot to speak. So if any of you guys see any of your neighbors trying to head for the back doors and get to lunch a little early, trip them. I don't want you to tap them on the shoulder and say that's a little rude. I want you to take them down, okay? So we're in this together from now on in. So and the second is, I'm going to ask a few questions, and I would love to get your help, get your thoughts on them and as I go through things. So please help me out here. So first off, I guess venture capital. As you guys either hear that word or think about it, any either thoughts come to mind or things that you think about when you hear venture capital? All right, you're not helping me, are you? Okay, good work. Thank you. So look, I had started 2 companies before I joined Greylock. And to be honest, we raised venture capital both times. One time through Greylock, another time Greylock actually passed on the investment. So, but I didn't really understand venture capital. I thought it was some smart folks that had a lot of extra time to sit around and think big thoughts. They got to say no a lot when people came and pitched them. But it didn't really occur to me, exactly what the business was, okay? What hopefully I can do today is give you a little bit of insight to some of the things going on in venture capital, tell you a little bit about the market, as we see the market right now. So I get asked a lot about, are we in a bubble? And then finally, maybe talk a little bit about some of the areas that we are thinking about for future investment. So think 3 to 5 years from now. So Katie, Julie, we're probably talking about either segments or things that might happen in the 1 to 3 year time frame. We're kind of thinking a little bit further out from that. All right, is that working? Look at that. So a couple quick things about Greylock. So Greylock, venture capital firm, been around about 50 years. Started in the Boston area, migrated out to Silicon Valley as we really transitioned to mostly being a software investor, okay? So we think of software investing really as consumer internet, right? A lot of mobile, a lot of other things like that, and enterprise IT are kind of the 2 main things that we tend to invest in, okay? We also, as we think about the partners who invest in those, they tend to be experts in the areas in which they invest. So I always talk about folks like Jerry Chen, who has been investing really in infrastructure businesses and led our investment in Docker, spent the previous 10 years at VMware, right? So let's find experts in the areas that they know and let them go invest from there. Actually, one other thing back on that, if I can go back, is we tend to be early stage investors, so we will invest kind of in the first or second round. So many times these are very young, very fragile companies, right? And so, as you think about some of the things I'm going to say about where we are looking and where we're looking to invest, take that into account that we are investing relatively early, and so therefore, have both some successes and some areas where things haven't gone so well, okay? So I want to start, maybe tell you a little bit about what we're seeing in the market in venture capital right now. And I'll start talking a little bit about the public markets, right? Many of you probably have seen or experienced in your own portfolio some bumpy times over the past 12 months. This is the NASDAQ overall listing over the past 12 months. This is 2015. And I think the short answer is it was just very volatile. Right, 20% swings top to bottom over the year, a little bit of an up year if you look at it, but really was a year full of fits and starts. If you think about that in the context of the last probably 15 or 20 years, it is really what we think is kind of the end of a bull market, right? So the last 7 years before last year was pretty much up and to the right. If you look at the previous 2 bull market cycles, they're about 5 years, and then something happened, right? In 2000, 2001, there was the internet crash or the internet bubble. Obviously, in 2008, there was the financial crisis, okay? So we're not sitting here saying, oh, doom and gloom, but it probably wasn't a big surprise to us that, this year started off looking a little bit like this, right? Now why do I talk at all about the public market, because we are a private market investor, not surprisingly, when you invest in a company, you want to actually sell it or have the company go public so you can actually cash in on that investment, right? So what's happened is the IPO market for technology investments has struggled. Really, if you look at what happened the beginning of last year, you started seeing the signs that this might slow down. So for example, on this little slide just shows that 55% of the IPOs that happened last year in technology or venture-backed technology areas were trading below their issue price, so the price at which they went public, right? And it's even worse if you look at where they ended their first day of trading. Usually get that first day IPO pop. They're down about 15%, okay? If you look at what happened to when the companies were trying to price in the first 3 quarters of the year, it was actually pretty normal, 40-ish% priced right within the range, some a little higher, some a little lower. But if you look after Labor Day of last year, almost 60 or over 60% of the IPOs actually priced below their issue price. So there were some issues in the IPO market. Okay, doesn't mean it's a terrible thing, but just means that the main thing we think about in sort of the public markets was going to struggle. The number of IPOs last year was down significantly, right? So if you look at 2013, 50 plus IPOs, same with 2014, it was down by about half in 2015. So all of that just says to us, and excuse me, one more here. I think a lot of you heard of this. You'll see companies that raised a big private round just before they went public are trading below where that round is. That little red X is kind of their trading price sometime last week, and that little yellow circle or the dotted yellow circle is where they did their last private round, right? So you're starting to see this, what we think of as a disconnect between private and public markets. In other words, public markets are valuing companies lower than private markets are, okay? So as we think back now to some of the private company markets, there has been a lot of funding in these markets. So what this chart shows is, I think from 1995 forward, the line is the number of companies that have raised financing and venture capital. This is just the software segment. The bars are the dollars that were invested in that quarter. So if we think about this in the very simple case, in the last 3 years, about 40% more dollars went into venture-backed software companies than did just before the internet bubble burst, okay? So we also look at that and say, okay, this market feels a little overfunded to us. I'm sure you guys have all heard about unicorns, right? This is companies that are valued privately for more than $1 billion. There's about one estimate from the Wall Street Journal. There's about 90 in the U.S. And that number continued to grow, although it was slowing down at the end of last year. And then something that pains us is that the valuation that companies are commanding when they raise money in private markets was up somewhere between 20 and 50%, depending on the stage of the companies. So this chart just shows things like the Series A is that sort of first round of funding, probably up about 15% from 2014 to 2015. If you look at the late stage, Series D, probably up about 40% when you look at kind of averages, okay? So we're a little concerned about, venture capital and private market investing. But, we're also starting to see some things change a little bit. So people are starting to realize that the party may be over a little bit, and I don't want to be too dire here, but, last year was the first year in the last 6 where more money was invested into venture-backed companies than came out. Right? So in other words, that companies that exited. So either through IPO or sale. And so any of us who know anything about investing, that's probably not a great place to be. You generally like to see 2012, where a small amount of money goes in and a lot of money comes out, right? Now, we're starting to see some of that change. In Q4 of last year, this is a chart by quarter of the number of venture-backed companies and the dollars that went in. And so you saw in Q4 last year, and this is from CB Insights, that the dollars dropped off and the number of companies that were funded by venture capitalists dropped off pretty heavily as well. Okay? So at the highest of levels, when we think about the market, people will say, Tom, is it a bubble? I don't see a bubble here, but I do see something where we would say We expect volatility in the public markets, everything from all the things you've heard, China slow down, the Fed yesterday said they're going to continue raising rates. We also expect the IPO market to be relatively quiet in 2016. We have a sense that valuations in the private market are going to start compressing a little bit, but I don't see anything that would mirror what people think about when they talk bubbles. So at any rate, is that a helpful sort of overview of some of the things we see in the market? All right, good. There was some conversation there. I like it. So one of the things I want to talk about next too is this process of venture capital. What does it look like if you're starting a company and you're trying to raise money for your company? So I thought this chart was really neat. So this was CB Insights put together a view from 2009. About 1,000 companies were seed funded. So funding, usually friends and family, angels, that kind of stuff. And they tracked through all the way through to last year. The number, about 40% raised a second round, right? About 25% raised a third round of funding, and all the way down to about 1% raised that last round. Now, obviously, some drop out, some close down, some are sold, some become unicorns, right? But this is a pretty vicious funnel when you think about what an entrepreneur goes through. And I tried to pull some numbers together from a Greylock perspective, like for 2015, just to give you a sense of kind of what the funnel looks like before we fund companies. We saw or were introduced to about 10,000 companies last year. Okay? We met with about 1,500 across the partnership. About 50 came and presented to the full partner, so that's usually kind of the last step before you do a full funding. And we funded 16 deals where we took a board seat, we're a major player, okay? So that's a pretty vicious funnel for anything that you look at. And so, this industry of venture capital is, one, can get swayed around by big markets, but two, you got to do a lot of hustle to find all these interesting deals, okay? So I thought what might be fun is, given that Katie and Julie spent a good chunk of time talking about, technologies and companies that are affecting you now or the next, couple, 3 years, I thought it might be fun to talk a little bit about how we are looking at sectors, or some of the sectors we're thinking about, going forward, call it 5 to 7 years from now. So I always think this is fun. This is a good thing for me as a reminder for Greylock. So this kind of maps out where we invested in different companies, in time. So if you look at companies like Workday, Palo Alto Networks, Facebook, LinkedIn, we invested in them 2005, 2006, right? So probably 5, 6, 7 years before they really impacted the market, right? So if you look at kind of a next generation, Cloudera, AppDynamics, Delphix, Airbnb, Pure Storage, we invested in those companies between 2007, 2010, right? And now I think those are companies that you guys on the enterprise side are probably seeing more regularly, but also, on the consumer side, obviously in Airbnb having some pretty spectacular success. So this notion that, we are thinking and trying to invest in companies 5, 7 years from now, hopefully resonates. When you're investing early stage, you're thinking a lot about what's going on in the market, right? And we can talk about what that means. The team tends to be something that is crucial for these young companies. It struck me watching Hayes yesterday. He has many of the characteristics that any venture firm is always looking for. Someone who, obviously is passionate about what they do, but is smart, can recruit great folks to his team, is able to take customer feedback on his product, right? These are the kinds of things that we look for, in these young companies and young entrepreneurs, right? And then obviously, most people think that the whole focus of an investment is on product. Clearly, that's an important part of it. But, as we think about products, that we want to invest in, obviously they have to be technically interesting, have deep IP, but we also look for things like an unfair advantage in how they're going to distribute. Are they also able to leverage networks to get more buzz around them than they quote unquote deserve at their age? All those kinds of things. And many times when you come out with a new product, you can't be 10% better, right? You have to be 10x better, right? And when I say that, it's like, if someone came to you and said, I've got an amazing storage product and it's just as fast, just as reliable, and it'll save you 10%. Like, there's no way you guys would take your precious data and put it on a new startup that could only give you 10% benefit, right? So in those kinds of businesses, you have to come back with a massive difference, all right? So what I thought I'd do is, on the enterprise side, walk through a little bit of some areas that we tend to focus on, give you a quick sense on most of them about what we think about in the market. There's probably a couple I'll dive into a little bit more deeply, but obviously, in any of these cases, happy to talk a little bit more about what I know about them, but also, from a Greylock perspective, we can connect you with folks who think about these markets all the time. So, to oversimplify, we think about infrastructure areas of, compute, network, and storage. We spend a lot of time thinking about, application infrastructure and data, right? So be it databases, be it, different ways to move data. Security is clearly something that we spend a lot of time on, and management and monitoring is another area we spend a lot of time on. On the application tier, there's a lot of ways I could draw this, and you'll see a couple later on as well. But front office apps, back office apps, productivity, analytics, there's a bunch of different ways to cut that. And so what we do once a year, and we just finished doing this last week, I guess, is we go through a bunch of our sectors and we talk about them as a group and talk about which areas we're more bullish on and why, which areas we're less bullish on and why. And I thought maybe I'd share a little bit of that with you as well. So, if you want to make money 3 to 5 years from now, just invest like that, okay? Is that good? All right. So let me just kind of walk through these one by one, and we can talk a little bit more about it and kind of go from there. So look, in the sort of relatively obvious case, hey, security is probably an interesting place to invest, right? Massive market. I've seen numbers where it's $35 billion in the U.S., growing to probably $70 billion. When you think about kind of some of the disruptions happening around, obviously there's a massively changing threat landscape. You have, enterprise or kind of central control, of applications starting to change, in terms of anybody can download lots of things. You've got different access points, be it BYOD on your mobile. But there's a bunch of different challenges going on in security. At the same point, we also believe it's, because of the size of the market, it is attracting a massive amount of funding. It is also getting to a point where we rarely see a space that has 1 or 2 competitors. We're now starting to see 5, 10, 15, 20 companies that have gotten some funding for some of these places. So, I always kind of giggle when I see something like this where, you have what probably seems like, especially at the early stage, 5, 10 companies that look like they're doing the exact same thing, right? So we are very, very focused on security. At the same point, we're probably a little more hesitant than other folks right now around security, just because we think there's just a little bit too much funding. At the same point, when we have guys like Ashim Chadna, who has been with us about 13 years and spent a bunch of time at Checkpoint Software before he invested in Palo Alto Networks and other things, you let them run and you find interesting things around security. Katie talked a lot about infrastructure as a service, and I think when we think about the infrastructure space and kind of kind of conjoined with that, I guess, is the sort of management and monitoring space. We kind of see it as you're stuck between a rock and a hard place. The rock being AWS, right, and the hard place being open source, right? For starting a new company that is going to sell a standalone product into kind of some of these infrastructure spaces, we think there's a lot of challenges there. It doesn't mean we won't find investments. Like I said, we invested in Docker. We see the whole microservices play as a very interesting trend. We're looking for a lot of orchestration plays, but we're probably more hesitant there than we were 3 to 5 years ago. Now, that can obviously change as you think about can Azure really take a hold. I mean, it does seem like it's getting some interesting traction. Google Cloud just brought in Diane Green from who started VMware to run their Google Cloud initiative. So, we do think there's some possibilities there, but we're a little bit hesitant. If those, more other public clouds as well as private clouds really take hold, we do think there's going to be some interesting opportunities around, cross-cloud integrations, around data movements, around orchestration, around those kinds of things, and we're looking at those actively. But once again, we're a little hesitant around these spaces, for the next, bit of time. what I think of as kind of app infrastructure, so this can be everything from development tools to, actually development languages. You'll see open source development languages. Sometimes you see, things like, GitHub or Atlassian in these kinds of spaces. We have traditionally not found them to be big spaces. We continue to look for one big reason, which is we do see, developer-driven demand. So in other words, developers are going to find their own tools as a very interesting space, and it's something that I do think we'll see more of. At the same point, we're probably a little more hesitant in this space. Data and analytics, a lot of people kind of have already asked me questions about, why are we a little hesitant in this space? And we may be a little contrarian here, maybe. The way we think about things is that right now, the core data layers, so the Hadoop providers, MongoDB, other NoSQL databases, they've, I don't want to say they've played out, but there's a good number of companies that are going after those spaces. When you think about core visualization or basic analytics, we think there's been some interesting plays there as well, but we're not so sure how much of that's going to be going forward. In our investments in the past, 5-6 years, we are investors in Cloudera and Domo and Trifacta and Delphix. So, we've believed in this space heavily, but we're kind of seeing this space a little bit more in a digestion phase than a creation phase. So what that means in our world is we think that, now the hype is kind of ahead of where the reality of value delivery is to large enterprises around data and analytics. And we're kind of thinking that these tools and these frameworks and these notions are going to have to be leveraged into other types of applications before we start seeing huge value out of these spaces. So we're a little hesitant here. We're not going full bore into that. Now on the flip side, in the application tier, we actually are very bullish about this, partially due to what I just said, which is we do think there are some really interesting opportunities to disrupt major players in the application tiers based on differentiated data, differentiated ways you use your data, everything, everyone's got their favorite way to call machine learning or computer vision or, pattern recognition and all these kinds of things. We're seeing a lot of interesting things around that. One way to kind of think about those spaces is in a very horizontal way. So software that can play across virtually any kind of enterprise. And once again, one way to think about where opportunities may lay is if you think about a kind of digital go-to-market, so something that isn't going to necessarily need to build a large enterprise sales force. The large incumbents, not surprisingly on day one, dominate young companies when it comes to go-to-market in terms of a physical sales force. But we're starting to see everything from companies that have disrupted in a classic way. The Zen Payroll or now Gusto. A bunch of these companies that have had very digital distribution started with the SMB and are now moving up to the enterprise. But if you look at some of these areas, for example, if you look at financials, look, we think there's a really interesting opportunity to build the next Concur, for example, right? We think there's some pretty interesting plays around CRM. We've invested in a company that's still in stealth mode around sort of consumer-facing CRM and what's going to happen in the next phase of the customer support centers, okay? So we see some interesting opportunities there, and this is one way to think about it. The more you have a departmental sale, and the more it's kind of a digital go-to-market, we think there's some pretty interesting opportunities there as well. The other way to cut this is really vertical markets. If you would talk to us probably 5 years ago, maybe even 3 years ago, we would not have invested in a company that was building software for a specific vertical. So one example of a very successful company in that is Veeva. Veeva, basically took Salesforce's platform and built a pharmaceutical specific CRM tool. And it's been wonderfully successful and done some great things. That is not something we would have looked at when Veeva started. As we think about this, once again, one way to think about this are which verticals, can support a digital go-to-market. Not surprisingly, you see tech all the way out there on the right side. And which are, have been, I'll call it disrupted or not. So we're trying to take a look at those. We've just made an interesting investment in a company in the construction space, which is not a space we would have looked at a long time ago, okay? So we're actually pretty interested in the whole application space. Productivity is another space that we haven't seen a whole lot of innovation. previous to the last 2 or 3 years? All right, I'm gonna need your help again, and let's see if we can do a little better this time. Who knows what this is? Come on. Anyone heard of VisiCalc? This is one of the first spreadsheets, and this was, I want to say it was 93, okay? Anybody seen this? Anybody had to set up Windows or Windows Office through one of these horrible things? Anybody ever seen, remember Adobe? Some of the early design software for the Mac? Anybody ever develop anything in HyperCard? There you go. We got someone going. I like it. So the reason I show this is, while they might look very different, I mean, really Excel hasn't changed all that much. I mean, there's a lot more features and a lot of other cool stuff you can do with it. There's not a whole lot of easy sort of developer tools like Visual Basic or HyperCard or those kinds of things. And one of the things we've seen why, and this is a bit of an eye chart, but if you just oversimplify for a sec, what this shows is computing shipments by year, since, 1977. That big blue thing in the middle is Microsoft, when we were living in the Windows PC era, right? And not surprisingly, when you have one single platform and one player that controls distribution, you didn't have a significant amount of innovation in those spaces. Over the past, probably starting in the web era, when you had Netscape and IE and Firefox and those kinds of things, you saw some interesting disruption around sort of the internet. And now recently, obviously with Android and iPhone, you're starting to see a little bit more. But we're now seeing this more as an era, you could argue, and people have argued with me, that Android is now a dominant platform. I don't really see it that way. But the way we view this is we're now not in an era where there is such controlled distribution, and you can actually innovate around productivity. We think there's some transitional winners in this space. So things like Google Apps, Adobe's Creative Cloud, which in my opinion is much more a driving of revenue to the cloud versus a cloud-based product. Dropbox or Box, you could argue, are transitional winners, and Office 365, I think you could argue, just given that there are now billions of dollars of revenue flowing to each of these companies, right? But at the same point, when we think about the things that are going to drive change in productivity apps, mobile, cloud, and then really this design etiquette that we think is going to be very different. We do think, as Julie said, when she mentioned Slack, that messaging versus email, there's a very interesting trend going on there. We're seeing Slack being very, very sticky in the engineering and development areas, but having trouble breaking into broader enterprises. So we're going to keep our eye on that, but we think messaging and therefore collaboration is very important. Multi-screen and touch is obviously massively important in these markets. We don't think really any of those transitional winners have done a great job with that. We don't see that distribution as we talked about. And I actually think the desktop disappearing may be too strong of a word, but it's becoming less important. So when we think about some of the interesting companies in that space, we've already made a couple investments in this space, but we're actively looking at this space as well. So, in the messaging-centric views of the world, if you still think email and messaging is going to be the hub where productivity works, that's one area you would spend a lot of time on. If you instead believe that content will be the center of where people spend time on productivity apps, so things like documents, we made an investment in Quip, but there's other interesting companies around that. If you think about data and spreadsheets, right, there's companies like Airtable and Fieldbook and a few others out there. If you think about presentations, Prezi, or other things. But by the way, Office 365 could continue to innovate and win in this space, right? So I don't want to discount that by any stretch of the imagination. Around design, we're starting to see some really interesting plays that are going pretty much at Adobe's core, right? Once again, we'll see if they win or not, but getting this notion of collaboration in real time, having designs be easily shareable across mobile, tablet, browsers in a very performant way where you have to massively rewrite the software. We think that's another very interesting space. And obviously task and product-centric stuff. So, the companies that are able to achieve this, we think are going to have some pretty interesting success. All right? So that's kind of the main things that I was thinking about in terms of our enterprise spaces. I have I'm looking at the clock here. I'm probably gonna go a little bit over, so if you see me get the hook, I apologize. When we talked about, I've spent most of the time talking about the enterprise IT stuff. That's the stuff that I know. I was debating whether to share a story, but I'll share a quick story. So, when you go through life, you get these moments when you figure out that, you're kind of, you shouldn't sort of change the way you focus, and I've realized I don't understand how consumers act, and it was reiterated to me. I've got an 18-year-old daughter and a 15-year-old son, so when my son was in 7th grade, we got a note back from his, I think it was Spanish teacher, and said, Nick's doing great, it seems like he's really doing the work, doing well on his tests and quizzes, but right now he's got an F in homework. And I'm like, huh, we see him doing his homework every day, and and I say, Nick, hey, we just got this note from your teacher, you got an F in your homework grade, what's going on? He's like, well, I'm doing my homework. I'm like, okay, you're doing your homework, but are you turning it in? He's like, yeah, I'm probably not so good at turning it in. I was like, oh, okay. Let's talk about that. Why is that? I'm like, why don't you just, when you walk into class, take your homework out, stick it on your desk, and that'll remind you to turn it in, right? He's like, Dad, we play ping pong for Spanish. And I'm on the ping pong table, and so we're late every day to Spanish, so there's no way I could take that paper out. And he's like, all right, Nick, it's very clear that I have no idea how consumers react. But one of the things that I think has been special about Greylock is that we've been able to have both investments in consumer and enterprise, and they actually feed off each other. So if we think about some areas we're thinking about on the consumer side, that actually will start bleeding in a little bit more to some of the areas more on the enterprise side. So we think a lot about social and communication networks, right? So be it sort of the last generation, if you will, the Facebooks and LinkedIns, the Instagrams of the world, but also where do things like WhatsApp and Snapchat come into play? And really there you're looking for things that can build a one massive scale. 50 or 100 million users isn't really enough. You're trying to get to a business where hundreds of millions of people play. Content and information networks, is another place we spend a lot of time. Names that you guys all know, the Twitters and Pinterests of the world. But for those of you who don't know the internet gaming space, I don't know if you've heard of Twitch, but this sounds crazy to anybody my age, but Twitch was sold to Amazon for $1 billion, and all it does is it allows different people to watch other people play video games, right? So you tell me, right? But whatever collects eyeballs. Transaction businesses, obviously the Amazons of the world and Pricelines of the world have done a great job in those spaces, but we really think a lot about marketplaces. And marketplaces we think are these really, really interesting things where, eBay being sort of the best and brightest of the past generation, this generation, obviously the Ubers and the Airbnbs of the world. But the way we think about them is they're this interesting combination of a transactions business and what we think of as network effects, or some people call virality, right? And we've just hired someone who has spent the 4 years at Uber to kind of help actually go try and start a business in this space. And he wrote something yesterday where he talks about two things that really, we're talking about three things, but I'll highlight two of them. One is, in a marketplace, you're building both supply and demand, right? And, not surprising, you can't have the two be out of whack with each other. You have to get them to balance, because if, for example, on eBay, I'm going to post something, I want it to be likely that it's going to sell. And same thing if you're on Airbnb or Uber. If you're in Uber, you actually want to get someone to pick you up, right? And if you're a driver on Uber, you want to make sure there's enough people out there using it, right? So getting those two to balance is pretty tricky. Michael Powell, who's this entrepreneur in residence, talked about you got to focus on the supply side first, because if you do get what's going to work on the demand side is always going to outstrip supply. And then second, he talked a lot about you can't always listen in marketplaces to one side or the other. And he gave a really interesting example. So, I don't know, how many of you have been in an Uber or tried to call an Uber and you see their, surge pricing, it's 2 or 3x or whatever it is, right? He basically said that is one of the main reasons Uber survived. And it's one of these counterintuitive things where he just said, look, we were having tons of trouble getting enough supply late at night, for example, in a town where the bars close at 2, between 1:30 and 2:30, they couldn't get enough supply. The only way they could convince drivers to get the supply to match demand was to have surge pricing, right? So it's those kinds of insights and those kind of little tricks, if you will, in these markets that have led to, that right now, if you look at any list of unicorns, there's about 15 unicorns on those lists, so 15-ish% of the companies that are, started are on those unicorn lists or marketplaces, and, over $100 billion of value, right? So at any rate, I'll skip some of this other stuff around this. There's some interesting sub-segments of that. But, I just wanted to say, once again, thank you very much. Appreciate you guys bearing with me just before lunch. Hopefully you've heard a little bit about how we think there's going to be some volatility in the public markets, what we think about private markets, and a little bit about some sectors we hope will create some really interesting companies, 3, 5, 7 years from now. Thank you very much.